Welcome back. It's a very interesting looking screen. The market, every rally is again getting sold into. So again, the Nifty is down. Look at that bar. The last bar on the Nifty is very interesting. So 25 points down now. The Bank Nifty is still holding out in the green, up about 60 points. But it's not looking a comforting screen, let's put it that way. Ashwani Gujral, Mitesh Thakkar and Prakash Kaba are now back with us. Ashwani, any trades on the index right now, and what are the stock calls?
See, in my view, we are kind of giving up 11,290, 11,300 a number of times, and this is now becoming a trap. So anybody who expected short covering is now going to get into trouble, and you will have the market moving lower. If it moves up, your stops are 11, 310, 315, but I would think that again there is no follow through, and today the HDFC Bank rallies are over. So HDFC Bank, Kotak, etc., they are likely to see downside. Plus you have Infosys and TCS which are moving lower. So that way, I would be short now because if we had to break out, that breakout should have happened within the first half an hour. I don't think it takes this sort of time for breakouts to happen. Now Reliance is also in the negative. So that way, you are getting signs that the rally is failing. Having said that, individual stocks, Tata Steel is a buy with a stop of 440, target of 462. Kotak Mahindra is a sell with a stop of 1490, target of 1460. And HDFC Bank is a sell with a stop of 2350, target of 2300.
Okay. Got that. Those numbers are mixed up. Prakash, what are you trading?
I'll go long on ICICI Bank. Looks possibly can climb to around 420 zones, stop below 407. And M&M is also looking good. Perhaps we could form a base here. Target at the upside 580, stop below 547.
Okay, well, Escorts is one stock. It's hit a fresh 52-week low. It comes out with its numbers tomorrow. Ahead of that, the stock is under a bit of pressure, but it's bounced back from the lows a bit. Prakash, Mitesh Thakkar is also with us. Prakash, thank you for joining us. Mitesh, hi morning. At 10 a.m., what would the big trades be? I mean, the market is slightly under pressure right now.
I think the market will be choppy, and I still don't think we'll get a directional movement, but I have one buy and one sell. Dabur, I think, has moved up slightly, but around 425. Try to attempt a long over there with a stop at about 419, and look for targets around 435, 436 there. While Havells, if it breaks 680, I would want to sell it, take a short position there, and keep a stop at about 692. Look for targets of around 660 over there.
Okay, by the way, a couple of other stocks in focus. Jubilant Foodwork is now at the high point of the day, 1.5% higher on that stock. And Yes Bank as well is moving up a bit. So just keep an eye on both these names.
Bandhan and Baroda are still holding.
Bandhan and Baroda are still holding. Ashwani, a follow through on PVR, 6% down.
It's basically wherever money is still waiting, that's where people are taking profits. So stocks like Indigo and PVR, they are vulnerable to these sort of corrections. But it's been a great portfolio stock. So at lower levels, maybe 1500, 1550, you should try to get into these stocks.
All right. Thank you very much, Ashwini. I'm sure we're going to need your help often today. But the market is going from weakness to weakness at the Nifty level. Now at the lowest point of the day, the Nifty, 11,222 is where it stands. So it could not maintain even that flat mood beyond perhaps half an hour or so, beyond the first 40 minutes of trading, and then it has given up. So it's looking a little bad even at the advanced declines level. It's now almost expanding to 3 stocks in the red for 2 in the green. But let's see how things pan out from here. It's at the moment looking a little troubled. Initiative clearly with the bears. Let's see what the commodity trades are at 10. Manisha Gupta has joined in again. Good morning, Manisha.
Morning, Lata. Thank you so much for that. Well, we're starting with the crude oil prices, and we have seen choppy moves come in for this one. After yesterday's gains that we saw in the New York session, we haven't been able to hold on to those kind of levels. It's trading quite flat in the international markets, and that is the cues that we are getting in for the Indian crude prices also. Well, this week actually is ending in the negative, even as we saw a very sharp decline in the U.S. inventories by almost 11 million barrels, and there are concerns still continuing in the Middle East. Even with that, we have seen crude prices actually shrugged that off. That is because of the global economic slowdown, and the demand numbers being revised on the lower side from almost all quarters is what's weighing on to those prices. Take a look at the gold and silver prices. Well, yesterday was a knee-jerk reaction after the ECB monetary policy and Mario Draghi press conference. It wasn't as dovish as expected, and there definitely wasn't a rate cut, and that actually did lead to a knee-jerk reaction. We saw the gold prices decline by $10 immediately. There has been a bit of buying from those kind of levels. The important point is that $1,400 per ounce is still holding in case of gold, and the expectation that as we move forward from here by the month of September, we would be looking at a rate cut from ECB and perhaps from US as well, and that continues to be supportive. Silver prices continue to hold around 41,000 rupees. It's at 12-month highs in the international market, and the ETF buying in silver in global markets is at record highs at these levels. So this is a sector that continues to perform well. The base metal prices have a lot to digest at. Last 24 hours have seen stronger data coming in, whether it has been about the US jobless numbers, the factory numbers, or the retail sales. That data has been on the positive side. And what we're watching out right now is the US second quarter GDP numbers in the evening. The other thing is the strength in US dollar. That one is at a 2-week highs versus the Japanese yen. That is something that would control too much of a gain here. But then again, on Tuesday, it is the US and China negotiators meeting in Beijing, and something positive expected out of that meeting is what will keep many of these metal prices on the go. Nickel continues to be your best performer, 1% up, but this is after 3.5% decline overnight. But nickel inventories have continued to decline. Demand has been stronger. Any new nickel mine takes 10 years to develop. So with the kind of demand that you're looking at and the time period for a new mine to come up or a new project to come up, that is a fundamental keeping support on prices. Trading strategies, and we have them from Comp Trends. It's a sell-on rallies coming in for gold. 34,650 is the target on that. It's a sell continuing in case of the crude oil prices as well. 3810 is the target for that. But there's a buy in the case of base metal prices, especially in the light of that US and China trade talk in the next week. So for nickel especially, 1020 is what you can watch in the day today.
Okay, thanks a lot for that, Manisha. We are actually deeply worried about something else, which is the DHFL resolution problem. Yesterday, we discussed at length with a banker, with a mutual fund representative, and with a lawyer. It's not easy to put together a broken down non-bank finance company. It's one thing to resolve a steel company, but quite another to resolve a finance company. That's where a large part of the debts could go bad. And now what we realize is that even if the bankers agree to a plan, the mutual fund guys are extremely worried about joining the plan. They have several legal problems about joining the bankers' plan and several practical issues as well. Sumaira Abdi, our expert who follows mutual funds very closely, is joining us on the phone line. Sumaira, I believe you've spoken to a lot of mutual fund fund managers. What are you picking up?
That's right. Over the last few days, many AMC heads I had spoken to had confirmed to me that DHFL had stopped all communication with them post the last bondholders meet. In that event, AMCs and some lenders had met on the 24th of July to explore the legal options that are available to them and the feasibility of signing the intercreditor agreement. Now, some of the legal options which have been advised to them are that, they cannot move for winding up under the Companies Act. They can either consider signing the intercreditor agreement with or without any sort of conditions. They can wait for the resolution to take its course, or they can file a summary suit in the High Court for recovery. They could also ask debenture trustees to invoke the security cover. But, options are limited for AMCs, and most important is the opinion that is given by SEBI, as their main concern is that this shouldn't amount to a standstill agreement like we have seen in the Z case. Plus, investor interest should be protected. In open-ended fund, there is some scope, but in closed-ended funds, like, for example, FMPs, which may be maturing, there is absolutely no scope for any sort of rollover. I'm being told that bankers have reprioritized cash flows, and that becomes a concern for AMCs. Like we've seen in the SMP case with SL as well, the clear understanding from SEBI seems to be that between law and logic, you need to follow the law. Back to you.
Okay, thank you very much for that, Sumaira. So quite clearly a serious problem here. The banks and the mutual funds not able to see eye to eye, and their time horizons are also different. So this is going to become a serious problem. It's not an easy resolution at all. We'll do one thing. We'll take a break. We're going to discuss the slowdown concerns itself that grip India Inc. How much longer are we going to see these slowdown get worse? And when do we see them troughing out and see a growth? We're going to be joined by two economists, Sajid Chinoy, the Chief India Economist at JP Morgan, and A. Prasanna, Chief Economist, ICICI Securities, in a minute after this break.